So let's talk about some liquidity concerns. Liquidity ratios are tricky, and everybody watches them very closely during your normal business, but they're especially important when you're in the cannabis banking business. We look at our ratios a couple different ways. As an overall credit union, it's just the very simple, the basic way most people look at their ratios. But then we also look at it. We calculate all of our ratios less all the cannabis deposits. So if we had to divest, and I'll say that word a few times today, if we have to divest all of our cannabis deposits, what would we look like? And there's far-reaching implications that the regulators are concerned about. So it's important to watch all of your ratios. Even ratios, efficiency ratios get skewed because typically, if you just look at assets per FTE or deposits per FTE, those can get skewed because these are typically very high balance accounts, and they might skew your numbers a little bit. And even in looking at the expense ratios, I know I'm off track a little bit on liquidity, but it is more of a comprehensive ratio conversation. Your expense ratios get skewed a little bit because the cannabis program is a little bit more labor intensive. So you might have to have, I'm just throwing out a number here, you might have to have 5 FTEs when you start your program. And those FTEs aren't going to work on very many individual accounts. Unlike member accounts, core member accounts, you can have a lot of accounts per FTE. Well, in the cannabis banking world, you don't typically have that kind of ratio. So the ratios can be skewed on the high end and the low end, depending on which ratio you're looking at. But you need to look at them both ways if you're going to do any kind of comparative analysis in terms of industry standards or your own trending analysis. Shocking your balance sheet from a liquidity perspective is really important. Usually, everybody includes that with their ALM analysis, which makes perfect sense, and that's what we do as well. We do quarterly shocks in our liquidity to see what happens if we have to divest, again, is that word, if we have to divest of all of our cannabis deposits, what happens to our liquidity? Do we jump into a borrowed position, when we close all those accounts and send the cash back out on the street? Use of funds is important for the credit union as well as the regulators. From the credit union perspective, normal credit union operations, obviously, you try to make the best use of your funds to generate the best return that you can pass on to your members. In the cannabis banking world, it's not quite that simple. What you do with your money, obviously, in the regular credit union environment, is you invest it, you lend it, you use it for operations. And investing the cannabis deposits is possible and encouraged, but the regulators may put some restrictions on that. They will put some restrictions on your lending as well, not just because of the risk of lending to cannabis companies, but in terms of the liquidity concerns. Again, what happens if you have to divest and you have all your money invested or lent out? What happens to your liquidity position at that point when you close out all those cannabis accounts and the money goes away? And then the other use of funds is to fund your operations, of course, and they're concerned about that especially. And we'll get in a little bit more details on these in a few minutes. But those are the 3 big concerns. And I will say this from a regulator perspective, liquidity is probably the single most concern they have. And it's that big what if. What if the regulatory landscape changes and we have to do something with our cannabis deposits in terms of divesting? And that sounds easy, but it'd be very difficult to do that. As they say, that horse is out of the barn. So if something regulatorily were to change, we don't see that happening, but of course the regulators are looking to protect their insurance funds. So it's important for them to make sure that we would be in a safe place from a liquidity perspective if we do have to divest. So they're very interested in how you use your funds, as opposed to just keeping them on deposit and letting them sit at Fed earning 10 basis points.